Hi, this is Mark from Caliber Home Loans, and in today's episode of Mortgage Tips from the Trenches, we're going to take a look at Michigan property taxes and why that they usually jump up after you've made a purchase in Michigan. So let's go ahead and get started. In Michigan, there are two types of valuations on property with homes or land, the state equalized value and the taxable value. Property taxes are based on your local millage rates, which are voted on, and applied to the taxable value. Some cities and townships have different rates based on what school district the property is in. So there are lots of cities and townships that actually have multiple school districts. So depending on where you live in the city, you're going to be in one school district or another, and your taxes are going to change based on the millage rates for that school district. The state equalized value is basically called the cash value, and it's usually based on the purchase price of the home or very close to that price. Any annual increase or decrease in your state equalized value is based on the percent change in the municipality where the property is located and not on the actual parcel. So you may think that your house has actually gone up or gone up in value or down in value less or more than what the city thinks, depending on your situation, but it's based on the overall city. The taxable value is also initially based on the purchase price, half the purchase price. So the property tax value is also half of the purchase price. So future increases in the taxable value are actually limited to the lesser of inflation or 5%, whichever is less. So the increase is capped. And there's no cap on the downside. So if values drop, the taxable value will also drop accordingly. So recently, we haven't had a whole lot of inflation, so the taxable value in most Michigan properties has not gone up as fast as the state equalized value. So when the property is sold or transferred, the taxable value is reset to equal the state equalized value, which equals half of the property's cash value or purchase price. So this is also referred to as uncapping of the taxable value. And this is where the problem lies, is this uncapping. So one other thing is, in Michigan, we have homestead and non-homestead rates. So if a home is used as a primary residence, those rates are called homesteaded rates. And the millage rates will typically be lower. When a home is used as a vacation or rental property, it's considered non-homestead and rates will be higher. So it just depends on where you're at as far as the difference between the homestead and the non-homestead. Some cities and school districts, the difference is very close. There just isn't much of a difference. And in some areas, there's a big gap between that homestead and non-homestead. Again, it's just based on the city and the school district. So what does this mean for a buyer, really? So what are we up against? So let's take an example. So you're looking at a house whose owner bought it in 2012. And so the initial purchase price for that house was $200,000, and the city assessed it at $100,000 for a state equalized value. And then the initial taxable value was also $100,000 based on half of the purchase price. So you're looking at purchasing this house for $320,000 today, and the city's got the SEV at $150,000, and they think the house is worth $300,000, which isn't unusual. SEVs are typically lower than what the actual market value is. But the taxable value is only $130,000 because it was capped on the way up. So because the rate of inflation has been low, the taxable value hasn't gone up quite as fast as the SEV. So when you purchase the home and close, and the city gets the record of your closing and knows how much you spent, they're going to reassess that property. They're going to raise your SEV to half of the purchase price, and they're also going to raise your taxable value to half of the purchase price. So this is where the problem lies. You're looking at a gap. So all of a sudden it jumped $10,000 in SEV, but it jumped $30,000 in taxable value. And this is why your taxes jump up once the property is reassessed. So some tips for home buyers. Before putting in your purchase offer, call the city or township treasurer to determine what your future property taxes will look like. You'll give them the address, and they'll be able to look that up, and they'll know what city and school district you're in, and they'll apply the current millage rates to half of the purchase price, and they'll give you a really good idea of where your taxes are going to be in the future. Before putting in your offer, call your loan officer and have him or her run the numbers so you know what your payment looks like, your cash investment, and the future payments are going to look like. You should always ask for a total cost analysis from your loan officer to determine what options may work best for you. This is critical because not everybody fits into the same mortgage product. I mean, different people need different products for a variety of reasons based on your needs, priorities, and current circumstances. So feel free to reach out with any questions you have on mortgages or taxes or anything. 248-705-8431. You can text or call me at that number. Thanks a lot.